This is Leon Krailing of EBNet Stream, and I'm pleased to welcome to our interview today this executive meet and greet, Malungelo Zilimbola of Mazi Asset Management. Malu, first question, did I pronounce your name correctly?
Absolutely correct.
I always wondered whether I was
Well
getting it
done.
right or not, so I thought let me use this opportunity to double check.
Yeah.
How are you, and thank you for joining us?
I'm very good. Coming out of a weekend, a bit relaxed, so I'm glad.
Well, that's good. All the holidays are now over, so we've got to get back to the grindstone and start earning the moolah.
It's just been too much holidays. I think we need to reduce them.
Malu, as I've mentioned to you, these exec meet and greets are for people to get to know executives in the industry and for some of the people coming through the ranks to learn. So what I would like to do with you, if you don't mind, is actually take you right back to your early days, school, where you grew up, and how ultimately that developed into going to university and the decisions you made through that phase before getting to work life. We can then pause and talk a little bit more about that and then focus on how your work life has developed. So let's start off, if you don't mind, with your early days.
Yeah, I was born in Klerksdorp, in the Northwest Province, and I was born in the 70s. So you can imagine the schools were the uprisings at the schools, and when it was time for me to go to school, then my parents kind of moved to the Northwest, which was Bophuthatswana at the time, which was quieter and conducive for education. So, and then that's where I went for schooling in Bophuthatswana. There was a school called Are Kobue where I went to, and yeah, and then very intelligent student, A's throughout, and when it was time for me to go to university, I had a couple of scholarships, and I went to UCT, University of Cape Town, and I wanted to be as far as possible away from home, and that's where I started. And initially, I did a degree in quantity surveying. I did a BSc in quantity surveying, and the reason for that was that I wanted a combination of, a very technical as well as a commercial degree, and I landed up with BSc in quantity surveying, which was quantitative on the one hand, and also very commercial. As you know, the quantity surveyors are the financial managers of construction companies and in the engineering space. So that's where I started. And later on, after working for a year or so, I didn't quite enjoy it, and I went back to school, again UCT, and I did a BCom and ended up with a BCom finance honors from UCT.
So that must have been a huge decision for you to go back to university after leaving to now pursue a different path. So how were you motivated? How did you motivate yourself for that?
Yeah, at that time, actually, it was tough in the construction industry, or property investments, given the 98, when we had that crash in 98, interest rates went as high as 25%. You couldn't get any project viable or feasible. And it just made sense that, we're idling actually. And that's why it was easier for me to say, listen, I can take a year or two off to go back and study, because it was just blood on the street. You could just park your money on cash and get 25%. Imagine that.
It's funny how we forget so easily, because I remember those days of high inflation, interest rates up in the 20s. And when I speak about the potential impact of sanctions on South Africa with the relationship with the US and so on, everyone thinks like, that would never happen, surely. But we've lived through it and we've come through it, have we not?
Absolutely. We've lived through those days. Yeah.
I noticed in your profile you on LinkedIn you put there that you played soccer, be it through school and university. Was that something that was just a hobby, or was it something that you took quite seriously? Because I often think of you and I picture you in my head as the legendary Jomo Sono. There's a likeness there.
Yeah, no, I took it very seriously. I mean, from early years of schooling, I was definitely a very good soccer player, and yeah, all the way to varsity. And some of my mates that we're friends today are my soccer friends, and not necessarily guys that I studied with and studied the same courses, but guys that we played soccer with. And Funny enough, my oldest boy, who's now 19 years old, is actually followed suit. He's actually playing soccer. He's trying to get professional. So yeah.
So you're a professional in South Africa or abroad?
In the UK, in the UK.
That's how he's going for trials.
Well, he studied there, schooling, and then he's also university there, and he's trying to get into like a club, But he's
Wow.
been through the academy of the school, and then now getting into at university. He has to get a club, yeah.
Because I have to ask you, and this might make or break our relationship, but what is your favorite Premier League team?
Yeah, I know. It's Chelsea.
Oh no, oh no. The interview ends here.
Exactly.
Molly, let's move on then to you'd made that change in direction in your career, and then you went into the workplace from there.
Yeah,
And later you furthered studied this a little bit, and I'd like to just ask you about your experience at Harvard Business School in particular, but maybe take us through the early working days and how that ultimately developed.
absolutely. And I was recruited by Hendrik de Toy from my honors class, and I worked with a lady called Roseanne Howard, who also was in the class, and she worked for Investec Asset Management at the time. And she said a good word to Hendrik, for me. And Hendrik was looking for, at the time, if you remember, late 90s, early 2000s, there was a big drive for transformation. They wanted, some black analysts, to join Investec Asset Management. And I was one of those, that was there. And yeah, that's I started working, and given my background in the construction industry and also property investments, I started covering construction companies. And at that time, Murray and Roberts, I mean, those stocks were trading at 3 PEs at the time. And I was trained by John Bickert, and those stocks were proper value stocks, and John really climbed in, and we made a lot of money. I remember, that stock, Murray Roberts, coming from $3 to about $100, and really making, a huge amount of cash. So, and also covering on the property side, companies like Grey Prop, Pitfield Yoon was a big favorite of property companies, and he listened to my recommendations, and he made a lot of money. And Grey Prop, remember, was started by Alan Gray, by the way, and also given Pete's background from Alan Gray. So we quite like the stock, and it's one of those big stocks that he made money. When property was not a favorite at the time, and also the construction industry not a favorite. So I managed to get the guys to invest in, and the calls were great. And I was given more stocks to cover, transport, industrial stocks. That's how really I built and cut my teeth in the investments from 91 today.
And both Pitt and John are notorious value investors. So is that stuck with you from that point, or has that been adjusted or adapted?
It really was very interesting. So that was the grounding, and really the teachings. John was quite methodical and really. And interesting enough, when I moved from Investec Asset Management, I joined R&B Asset Management, and I worked with Charles Booth.
Mm-hmm.
And Charles Booth was not as much a deep value as John and John Pickard and Pete Yoon. He was a valuation guy. So I think that's where the biggest influence came from. It's from Charles Booth, who I worked with very closely. Was the chief investment officer of R&B Asset Management. I was a very senior portfolio manager, managing massive, assets, there. I think the influence came more in terms of valuation as opposed to value.
Yeah. And was it when you left R&B that you decided to start up Mazi? It was around 2006, is that correct?
That's 100%.
So how many years did you spend working for Investec and R&B before taking that leap into the entrepreneurial space?
It was about 7 years between the two companies. And I was quite confident. I had a very good, foundation John had also come from HSBC, where he was a research analyst. So the combination of John being a good investor He was a good researcher. So I learned quite a lot from analysis from him, as well as, portfolio management. By the time I joined RMB, I was quite a seasoned portfolio manager. So definitely I felt very confident, after 7 years that I could start my own business.
And how old were you at the time?
I was 33 years old, roughly. Yeah.
It's young and gutsy.
Young and gutsy.
So let's talk about how those guts managed through the years. So was it plain sailing, success from the start, or did you have your ups and downs?
Well, it was well planned. I planned my business, quite carefully in terms of, what I wanted to do and, low-hanging fruits, and I think at the time, if you remember, my biggest frustration had been that we had lots of black asset managers that were started and were not successful. I was quite intrigued by that, and I started reading up on some of the lessons there. If you remember Merit Asset Management, and you remember Prodigy Asset Management, and lately it was Afina Asset Management that started off quite nicely, and later on, really, started faltering. So I'd been studying some of those, and I thought that, if I were to start a business that's got longevity and sustainability, I have to learn from that. And there was a big gap at the time in terms of transformed managers, if you like, and I took advantage of that. And if you remember 2006, we'd come from 98 and 2001 crisis, stocks were very, very cheap. Almost 2005, you started that kind of turnaround in markets. I caught a little bit of that, the momentum all the way to 2008 before that crash. So from a market performance point of view, I caught the nice wave there. And in terms of being a black asset manager at the time, where there were not many, to choose from, I also got that right. So I think the beginning was great. But obviously, as the business grows, the challenges also grows.
So what is the AUM now and the number of people that you employ?
We've got 48 billion of AUM at the moment, and we employ about, call it 35 professionals. And in terms of investment team, we've got about 20 on the investment team. And the rest would be the support, on the business development side, finance, compliance, and marketing.
So let's maybe talk a little bit about the call it the institutional side of the market, the pension fund side of the market, and the support of those black asset managers. And I want to challenge a little bit and get your views on, do you not feel the term black asset managers relegates those asset managers into a space where perhaps they don't get the full opportunity that they otherwise would get if they were just being part of mainstream or whatever you want to call it?
It's a great question, Leon. And I'll tell you what, so it was necessary to be called black manager. I'll tell you why. Because in the beginning, if you start up a company being, let's say, a black fund manager, it's very difficult to gain traction from the beginning. So what helped me is to get into those incubation mandates. Remember, in the early days, what allocators would do is say, listen, yes, you're a black manager, we can see your track record, you're quite experienced, but there's that perceived risk, if you like, and then you get put into this incubation mandate. While those incubation mandates gave you a soft landing, from a big corporate, you get stuck in there. So the big problem is not the incubation mandate itself, is that you get stuck there. So you can stay there for 5 years, even more, and the guys just forget you, type thing. Even though you're performing, they said, listen, we've ticked that box, we've got Mazi, they're doing well, and they forget about you. So I think that there's supposed to be a process where you graduate a manager from those incubation. And once you graduate, then you stop, you throw away the title of a black manager. Then you play in the mainstream, you get compared to Ellen Gray Coronation. So I think that from a start, it's a necessary evil if you're starting out a business, given that you never gain traction before in the beginning. But then once you create that track record from these incubation mandates, you need to be really advanced and graduated out of these incubation spaces.
Yeah, so I see the value that there was in terms of call it that soft landing. So it was obvious to create those incubation mandates and to allow the development to then happen off the back of that. But again, I think it was one of those cases where we only thought so far and we didn't think beyond.
That's
So we
true.
never actually thought about how to transform the
That's
industry. Rather, what we did
that's
is we ticked the box so everyone could be happy and then
yeah,
left with that. And I think that the other unintended consequence is that call it the newer black-owned managers who have come to the market with that title are playing that same game.
yeah,
And I think that game has now run its course. I think the
absolutely,
people have already got
absolutely.
the incubation mandates, and I think it's the challenge to get guys to differentiate through their thinking, through their processes, through their messaging, and so on is sometimes also limited because of the fact that we think it's okay just to be black owned, essentially. So it's a challenge for the industry overall, and that's why we still have this dominance of the big guys, or partly why we still have the dominance of the big guys.
Yeah, that's true. That's true, Leon. Because I think for me, what you needed to do is to think ahead, as you just said, that from incubation, then what? And because you have not thought about that, you get a long tail of black asset managers that get stuck in the incubation. Some of them actually may not have viable businesses because when you get an incubation mandate, you're supposed to create a track record and be able to raise money elsewhere out of the institutional space, in the mainstream, and some of these guys get stuck there. So and then you create that, we call it a soft landing, but it becomes easy for everyone. The barriers to entry is low because you're a black manager, you've got incubation mandate from these institutions. But then you may find that you don't have a viable business beyond the incubation mandate. And that's really it creating that unintended consequences. Because you can see straight away if a manager has got the potential or they've got the right business model, they've got the right structure and the potential, to grow and to go mainstream.
But that's soft landing and perhaps a bit controversial, the words that I'll use. That soft landing can perhaps give you a false sense of security and make you a bit lazy.
Yes.
Because at the end of the day, you're still going to beat down the door. So how did you get out of that incubation mold and progress Mazi to get to a point where you now are fully sustainable, employing a material size team and so on?
Yeah. So for us, it was really an ambition, to create a big organization from day one. And even today, I mean, ambitions are quite big in terms of what we want to be. And the soft landing for us, we took it, for what it is, that it was a soft landing, and that we need to work very hard to build a good track record in order to go mainstream and also to build scale. And that's what we did. So ambitions for us was not to just land one or two or three incubation mandates and relax. We really wanted to build scale, and we took whatever advantages we could get along the way, including incubation mandates. But ambitions has always been much greater than that.
As you progressed the business, at some point decided to spend some time at Harvard Business School. Is that correct?
That's true.
Why did you do that? What prompted that, and how was that experience for you?
Yeah, that was after I'd run my business for 10 years, So I've got a thing with my team that if you've been with a business for 10 years, you must take a sabbatical. So for me it was that. It was a sabbatical to say, listen, I've been on the grind for a flat 10 years, starting a business, managing funds, raising capital. And it was really, a rat race, if you like. If you run your business, there's nothing called leave. You don't take holidays per se. Even when you're on holidays, you really don't, you stay hooked up basically, all the time. So then I decided to take that sabbatical, and I went to Harvard, and I did that course called OPM. OPM is Owners President Management course, which is really for entrepreneurs, whereas the AMP, which is Advanced Management Program, was for CEOs of companies, big corporates like if you're Sim Shabalala, that's what you do in AMP. It's for hired guns basically, and OPM was really for owners and founders of businesses. Really different, in terms of its approach and the network. I mean, we had about 150, students that come from all over the world, every single country. The learning from the peers. I mean, which is what Harvard really, drive to say you learn from your peers. That was amazing. So yes, that's I took that sabbatical to go to Harvard. Yeah.
So it's interesting. So I did the AMP at Harvard in 2018, and the two things I took away, which I always test with people, is the peer network. Every single person says the peer network and experience and learning from each other was amazing. The other thing I took away is there's no better marketing machine in the entire world than Harvard Business School, and their ability to on-sell, cross-sell, upsell in every possible way, all of their different courses to people. Once you have drunk the Kool-Aid, you're stuck with that Kool-Aid for the rest of your life. They really are good at promoting themselves. But what was interesting in terms of stats, and I might get the stats slightly wrong in terms of it, but apparently around about 40% of all people that do the AMP leave their employer within 1 year to go on to be entrepreneurs or whatever it might be. But then also 7% of all Harvard Business School graduates end up in jail at some point in time.
Oh, that's interesting.
I'm wishing you and myself all the best.
Absolutely. Thanks.
So coming back then to Mazi and the development over the last nearly at 20 years now.
So we're 10 years next year. Yeah, 2026. Yeah.
So you're at the sustainable level, and where you say you have great ambitions. So what do those ambitions look like in your mind?
Yeah, so for us is to diversify the business so that the business is sustainable. So we were an equity-centric, house, as you know. We started off, with hedge funds, and then we added long onlys. We were like 98%, equities in the beginning, and then when the crisis happened, the COVID-19 pandemic happened. I mean, there was a massive risk, volatility, if you like, uncertainty, and equities were hammered very hard. At March 2020, stock market was down 33%. Our funds were down, and then also clients started panicking and moving away from equities. So you get a double whammy where the markets are down, you're getting outflows. Really, it was a very difficult situation. And we had been slowly trying to, before the pandemic, slowly diversifying our business. But then when that crisis hit, we had to really move very fast and urgently so to diversify our business. And that's what we've done. So, and I think that for our business to be sustainable, we need to be diversified in terms of offering. And that's why we have now got equities, been still a large portion of our business, but we're now moving into balanced funds. We've got, a Sharia fund that's been doing very well. We've got an Africa fund. And off late, we've got a global equity fund that has done well. It's got 4 years track record. And we've got an AI fund, which we've also launched. So diversifying as a business, that's the one thing to make sure that we are sustainable. And if you start to populate those different offerings, we think that our business can grow to become 100 billion quite easily, because you've got, equities at 40 odd billion, and then there's a big growth on the global equities side of things. Africa is stunted at the moment because remember, you used to have, when we had 30% offshore limit, we had 5% for Africa. But then when we moved to 45%, that Africa portion was scrapped. So nobody at the moment invests in Africa, so there's no growth there. But where we see a lot of growth is in the fixed interest side of things. And we think that we under-indexed as far as fixed income is concerned. And we're looking to populate that with good skills. And the consolidation has been good for us because we're getting good skills out there. So you had massive consolidation between ABSA, Asset Management, and Sanlam, and a further deal between Sanlam and 91. And literally, if you look in that, triangle, there's a lot of skills that are falling by the wayside. And I think we're in a poor position to take up some of those skills. And I think that given that, we're looking to grow our business quite significantly in the next 5 years.
It's interesting that you, first of all, I have no doubt that you will grow your business, but it's interesting you mention Africa and how that's sort of fallen by the wayside. And if you look at the growth rates sort of central to Northern Africa, significantly outperforming Southern African region. So it's a bit of a pity in that respect that people aren't taking advantage of the development that's happening higher up on the continent. Why do you think that is?
Yeah, I think it's just the fixation of just taking money out. Our market, Dion. I think when we say 45% is the limit, it's not the target, it's the limit. It's like giving your son your credit card and you say, you must spend this much, and then as a limit, not a target. So I think what we did, when 45% happened, we just solved for 45%. I mean, I don't know how, these guys do the asset allocation and optimizing, the allocation to different asset classes. But it just seemed like our market just went, to 45. And because there's no obligation for the 5% into Africa, in the mix of things, so the guys just drew a line there. And in 91 actually closed down the Africa fund. A lot of the other big managers closed those funds because they were subscale, and with the 45%, nobody actually everybody took their money out of Africa. And it is a pity, because you're getting great returns that are uncorrelated. I think as any investor would like, uncorrelated in hard currency, in dollars, and that's what's happening in the continent. You've got a big demographic dividend in Africa, 1.2 billion people, average age of 18 years old, and things like FMCG, and infrastructure, technology, banking, those are still at their infancy, and those sectors. So it is quite a pity, I must say.
Yeah, and the greater the developments in or across Africa, the better it is ultimately for South Africa, given proximity and our own growth to trade and so on at the end of the day. So it is a pity. And again, I think there's a little bit of short-sightedness there and potentially a differentiation opportunity as well.
Absolutely. That's exactly how we look at it. That's exactly how we look at it, Johanna. To say, listen, we want to be, Africa is at our doorstep. There's so many advantages that we have. We've got infrastructure here. We've got the skills. We can literally, some of the other areas in Africa don't have asset management as a skill, so you can transport that skill. And we think that that's a big differentiator for us.
While we're talking about skills, you've got the Mazi grad program, which I'm always fascinated in. So can you explain? I mean, that's been going pretty much since your inception and running all the way through. And how have you used that to build your brand, to pay back a little bit, and to ultimately build your own business and team?
Yeah, so Leon, there's such a fight for skills in South Africa, and our attitude is that rather than go and pay up, and bring somebody from 91 Coronation, why don't we build our own timber? And that's how it started. So yes, it ticks all the boxes, but for us, we did it for really commercial and genuine reasons. It's not something that, it's like a text box thing. So, and it's been very beneficial to the business. We've been able to pick very smart skills from all universities, and when those smart guys come in, remember with the youth unemployment as well. I mean, it's something that we're not trying to solve that, but we're doing our bit, to add, to kind of resolve the issue of youth unemployment, which is at crisis level. And what you see today, you see graduates that are unemployed. When your parents says, "Listen, work hard and study and get a good degree and get a job." So a degree today does not give you a job, given the massive unemployment, youth unemployment that we have. So for us is to say we're getting skills, but we're developing those skills internally. We give these guys a chance straight from varsity. They come in, we take them through the program, and our program actually covers the different segments of the business. It's not only the investments. Some will spend some time in marketing, finance, in operations, and when we're done with the program, and then we have assessment. We assess all these guys, and then we say, out of the 5, let's say 4 has actually done very well, and we want to absorb them in the business. And we've got that capacity to absorb them either in the business development, in the operations, and also in the investment team. So it's really served us well, and we'll continue to do it. And I think we're adding up the numbers now to taking on about 7 to 10 a year.
Oh, I mean, well done, and it's great to see that, and I wish more and more people would do it, because particularly in the asset management fold, culture is so important as you grow, and to bring in new people, it's difficult to get them into the culture, to understand the history of it and where it comes from, and to feel it. And I think one of the best ways to do that is through grad programs, where people come in, learn the business, they get to see the DNA, and to adopt that DNA. And passion counts for so much when ultimately out there and positioning the business. So I think it's a fantastic initiative that you have going there.
Thank you.
Malu, final question before we end today, and I ask it of everyone that I interview, just if at all possible, and it's a tough question, but what is the one thing that you believe has stood you in good stead to create the success that you've had?
Yeah, it's a good one. It's a good question. So I think firstly, and I think to the youngsters out there as well. So it's to really make sure that you build a strong foundation, and that's what I did. So strong foundation in terms of technical skills, analysis, and I always tell the guys that you'll always be recruited. I mean, when I was in Investec, I was getting offers. When I was at RMB, I was getting offers. But one needs to focus. So for me, it's that focus. Is focus in building, your strong foundation, knowing, what to do when you invest, what is a good stock, what is your philosophy, your personal philosophy as well. As you rightly said, I've learned from John Bickert. He's a deep value guy. Pitfall Yoon's a deep value guy. But then, I learned up with Charles Booth. He's a different guy. So within all of these kind of experiences and interactions, so you build your own philosophy. And once you have that philosophy, you're able to have the confidence of knowing, of being a good investor yourself. And I think that for me, what has stand me in good stead is to build a strong foundation, and with a laser focus on learning. And also, once you're confident about, how to invest, your personal, style and philosophy, now you're able to do stuff yourself. And I think that, you can easily be detracted. You can be promoted quite prematurely. And I think youngsters must refuse that. Or you can chop and change jobs, and you really don't get that depth in terms of, building those technical skills.
Yeah, so I mean, I see it all the time, and it's been going on for years and years now. The amount of I call it job hopping, that
Yeah,
takes place. Guys are in positions 1 year, 1 year, 1 year, and you ask yourself the question: how have you created that foundation? How have you managed to learn? Because you're still getting used to the environment. You haven't built the relationships yet with people to be able to learn fully, and then you're up and you're off. And
absolutely.
that to me is a pity. There needs to be some form of patience and like you say, building a foundation for yourself.
And by the way, when you get promoted, prematurely, you end up right at the top being a CEO, and without the knowledge, and how do you manage your team if you don't know the knowledge, if you don't know how to do it, and if you don't have the respect of your team, I think that's also very important to be able to have that respect from your team, and that's how you're able to keep that team together, as a business owner or as a manager.
Okay, well, may that be the lesson for 2025. If we've achieved that and everyone's heard that one, I will be a happy man. Malungelo, thank you so much for joining us. We wish you all the best in the next phase of the development for Mazi Asset Management, and thanks for taking the time to be with us.
Thank you very much.
That was Malungelo Zilimbola, the CEO and founder of Mazi Asset Management, and this is Leon Kraling of EBNet Stream.